Hello passionate traders, welcome to our another segment or concept of time codex trading classes. In this video, I will explain one of the most popular trading strategy, the price action. But before that, let me introduce myself. My name is Lutfi, trading analyst in time codex. Okay, now let's get straight into the topic. Let's break it down one by one, starting from the basic. At its core, price action trading is all about interpreting market movements based solely on price chart, rather than rely solely on technical indicators. Traders analyze candlestick patterns, chart patterns, and support or resistance levels without relying on indicator or oscillators. They aim to predict the direction of price movement, whether it will continue or reverse. This strategy can be utilized in any market and time frames, but it only commonly employed by traders with short to medium time frames in highly liquid markets. It's simple. Price action trading strips away complex indicators and focus solely on the price movement on the chart. Make confident decisions. Directly interpret market sentiments through candlestick patterns and price movements. And it trends markets, making it suitable for forex, stock, commodities, and more. Price action operates in the present moment, enabling you to respond swiftly to emerging trends, hones your ability to read market psychology and make rational decisions, and adaptable to various time frames, catering to both short-term and long-term trades. Key principle of price action trading. First is candlestick pattern. This visual representation of price movements offers insights into market sentiment and potential reversals. The next is support and resistance. Identifying areas where price has historically stalled or changed direction provides crucial decision-making points. Third is trend analysis. Recognizing the direction of the prevailing trends guides traders on potentially entry and exit points. Fourth is chart patterns. Formation of triangles, head and shoulders, and flags reveal imminent price movements. After mastering the key fundamental principles, let's get through the tile of price action strategies that you can implement. Let's put price action into action, starting from the trendline breakout strategy. First, you need to identify price confinement level, often represented by trend lines. Enter a trade when price breaks above or below these levels. Examples: if a downward trend breaks above a trend line, it calls a signal buying opportunity. Confirm volume strength for validation. And establish a solid money and risk management plan, determine losses, and set a stop loss. Next, we have a tweezer pattern strategy. Formed by two or more candlesticks with nearly identical highs or lows, indicates a potential bullish or bearish reversal based on preceding trend. Interpretation is more effective when the pattern appears as support or resistance. Example in uptrend, a top tweezer pattern with nearly identical highs in the resistance area signal a potential trend reversal. Next, we have the head and shoulders. A recognized reversal pattern with three peaks, resembling a head between two shoulders. Middle peak is the highest, while the other two are the lower and approximately equal. Draw a neckline by connecting lows between the shoulders. Break below the neckline after forming the right shoulder indicates a potential trend reversal. Not all patterns result in reversal. Additional analysis may be needed for confirmation. Next is the pin bar strategy. A candlestick pattern with a small body and long wick, spotted support or resistance levels indicating potential reversals. Example, pin bar at support level suggests a potential bullish reversal. Next is the inside bar strategy. Formed when a high and a low of a candle are within the range of the previous candle. Signifies a market pause. often followed by a breakout or reversal. Example, an inside bar after a strong uptrend might lead to a breakout in the same direction. Alright, last but definitely not the least, the engulfing candlestick strategy. Occurs when a large candle engulfs the previous candle. Highlight potential trend shift, especially at key support or resistance level. Example, a bullish engulfing pattern after a downtrend suggests a possible reversal. Now, after learning about some of the strategies that you can implement, let's break down the essential tools that can help you navigate the forex market with the price action strategy. The first is candlestick charts. Display price action patterns, making them easy to identify. The next is support and resistance levels. Determine potential reversal or breakout points. The next is trend lines. Highlight trend direction and potential breakout opportunities. Moving average, smooth price data, aiding in trend identification. And the last is volume indicators. Confirm price movements and signal strong trends. After learning about some of the strategies and tools, you need to understand that price action strategies comes with challenge and risk. First is subjectivity. Interpretation can vary among traders, leading to different outcomes. The next is false signals. Price action patterns can sometimes generate false or misleading signals. Third is market noise. In volatile market, price action signals may be less reliable. Fourth is lack of automation. Requires manual analysis and decision making, which can be time consuming. And the last is incomplete information. Price action may not account for fundamental factors influencing the market. Wrapping it up, price action trading offers a simple and intuitive approach to analyze the markets. Mastering price action requires practice, experience, and continuous learning. Combine price action with other analysis methods for a comprehensive trading strategy, and recognize the strengths and limitations of price action to make informed trading decisions. That's a short discussion about price action trading. Hopefully, this provides you with valuable insight on how to implement strategy in your trading journey. See you in the next class and happy trading.